Okay. Good morning, Mohan. Thanks for getting this organised, and good morning, everyone. Thanks for joining us this morning. I'm pleased to say there's one or two names I recognise as existing Mabel users, although we've got 3,500. So if I forget your name, please forgive me. But thanks for your support hitherto. We're going to be here for 45 minutes or so, and I'm going to take you through what and who Mabel is and how you can use it to save time, money, and just do things much more efficiently within your advice business. So I'll begin with who Mabel are, then I'll share my screen and show you a bit about navigation about the Mabel site, which you can access for free. And then we'll go through investment research and then some of the financial planning tools, in particular cash flow planning. And if we get time, we'll talk about the roadmap of some of the things that are coming. I suggest, as there's quite a few here, taking questions live might be not particularly efficient use of time. But if you want to put questions in the chat, I'll do my best to see if I can answer those as we go. So Mabel Insights, we started January last year. The business is solely owned by myself and my two fellow directors. We launched it with a view to providing transparency into the model portfolio space, but since then we've branched out to cover all funds in the universe as well, plus stocks, ETFs as well. So you can compare MPS's multi-asset funds, any advisory portfolio you like, and do deep research and do due diligence, etc. And I'll show you how to do all of that. And then we've launched a whole raft of financial planning tools, risk profiler, fact finds, and also cash flow, which includes full tax planning. And that's all has workflow support as well. So you can share work with different colleagues. And if depending on your back office system, you can also push and pull data into your preferred back office. And I'll say it for the second time, everything I'm showing you today is free. So you're probably thinking, hang on a minute, what's the catch? How can that be free? The reason it's free is that we charge the investment managers and we don't charge the advisors. So not surprisingly, that's been pretty disruptive and it's attracted quite a lot of attention. And we now have, I think, 2,400, 2,500 advice firms using us. And that's growing at around 100 to 150 a month at the moment. So you're very, very welcome. So we monetize the business by charging the DFMs, although we cover data from DFMs that are not yet partners as well. We're trying to encourage them to join the throng. So we cover around 90 DFMs. Those that are partners of ours, we get even more data. So we'll be able to show you more sort of fancy in-depth charts. And what they get in return, other than obviously showcasing their solutions, is that as partners, it means they get data on when you've used their data on the site. So if you're familiar with using FE, for instance, that's what you get with FE. You're giving permission for FE to share your data with third parties, but also you have to pay for it as well. Not so with Mabel. So, okay. Hopefully you can see that. It appears you can. They say you should never work with, what was it, animals, children, and live tech. But, well, we're not doing the first two, but we're definitely doing the live tech. So that's what we're all about. If you click on mabelinsights.com, this is the homepage. Without creating an account, you can get quite a bit of information. So if you don't want to just sign up and you want to do a bit of kicking around first, you can do that. If you want to sign up, just do so here. And you need to do an email verification just to check who you are. And you can also schedule a meeting with us. So it's not just this webinar. If you want a one-to-one session with us, that button is linked to my diary and the diaries of two other directors. That's the only people you'll speak to. And we're happy to talk to you at length about one or more of the tools that you see today. On the homepage, there are a number of tutorials. So if your way of learning is to have a look at a tutorial, there's a YouTube video for many of the tools. Most of them are about 2 minutes. The cash flow one is a bit longer. It's about 8 minutes because it's a bit more sophisticated. Then at the bottom, there's a raft of methodology documents. So if you want to satisfy yourself how we're doing what we're doing, then please do have a click into that. For instance, in the cash flow modeling, there's a link through to 20 complex tax calculations, which we've had signed off by our tax consultants to verify our calculations. We also risk rate every advisory portfolio that you build automatically, and we also risk rate every MPS. And the reason we do that is we think the risk rating and risk profiling industry has become, well, too much of an industry. So we just wanted to create a universal risk language, which we've done from 1 to 5, 1 being low risk, 5 being high risk. So the risk profiler and the risk rating uses the same methodology. That means you can always compare like for like. It means that you never have to worry about one investment solution being risk mapped by one tool and not by another. How do you marry that up? So that should make life easy for you. Okay, once you've logged in, this is what you get. This page is a dumb page, if you like, and it describes what we do. So the top half is all about research and due diligence, and the bottom half is advisor planning tools. And you navigate the system by using the menu on the left, which I can scroll up and down. A few of these sections you won't have because I've got an admin account, but the vast majority you will have. And everything I show you today, as I say, is free to advisors, and we plan to continue that. Right, a couple of other things before we get into the tools. Right at the bottom, you see this button says settings. What this allows you to do is change the color and look of the output, which you may want to do for your own purposes. And you can change the text color, the title box background, upload your company logo, which will replace Mabel. So if you're using some tools that are going to be client facing, maybe that's something you want to do. But it's not either or. You can choose that on a tool by tool basis. Okay, back up to the top. Right at the top, you'll notice back office integration. Currently, we're connected to IntelliFlow and Iris. That's in beta testing at the moment. That's their standard 3-month due diligence process, but that seems to be going well, which means you can pull data in, do what you need to do, and push it back into your back office system. If you are using IntelliFlow and you're pulling in data, say for a husband and wife, make sure you've linked them as partners in IntelliFlow first. Otherwise, the system won't recognize that they know each other. Okay, let's look at performance to start off with. And we'll look at risk as well, and also fees. And you'll see just in a few seconds, you'll be able to easily compare and contrast. I know with some competitors of ours, if you want to use CMPS data, you have to get a license. And then if you don't look at their data for a while, you might get that taken off you. That doesn't happen with Mabel. You can have as many licenses as you like and are free to keep using the data as much or as little as you would like. Okay, so let's look at the performance tab first. Advisors are currently running 2,000 to 3,000 of these queries every week on Mabel at the moment. So it's a pretty popular one. It's aimed primarily here at those advisors that are looking to outsource to MPS and multi-asset solutions. However, as I mentioned, we've got access to every single fund, stock and ETF in the universe as well. So you can create your own advisory portfolios and put that into the comparison tool as well. And I'll show you how to do that in a minute. But for now, I'm just going to focus on model portfolios because that seems to be in hot demand from advisors. So up here, I select the company and the portfolio and the strategy type, etc., which will filter down the universe of what I'm looking at, because clearly I don't want to be looking at thousands all in one go. There's some help there about how to read the performance data. If I click on this, I get an alphabetical list of all the managers that we're covering, so quite a few. There are 1 or 2 not excluded, but not included. That's because they don't want to give us their data, but the vast majority of DFMs we do cover. I guess probably the most notable one is Timeline. They're not happy to share their data at this point. And whatever you create, you can also generate a report at the end for your own purposes. So at the top, you also notice something called custom portfolio. So if I've got an advisory portfolio, that could be 1 or 100 funds, I can create that and compare that to MPS. So I'll come back to that in a minute. But for the moment, let's have a look at, oops, can't spell, Quilter Cheviot as a model portfolio provider as an example. I can then filter by what strategy type I want. So I can narrow it down. The investment type. So, oops, funds or model portfolios, because some DFMs have a sister fund that's wrapped in a fund that mirrors what they do in an MPS. And then I can filter it by risk rating. And every portfolio is risk rated by Mabel, but we've also included those portfolios that are mapped by Oxford Risk. So that will be a slightly narrower field, but if that's what you use, that might be of interest to you. So without any filtering, if I just click on that, it reveals all of the Quilter Cheviot portfolios. That's quite a lot. So I'm going to say, well, actually, I'm just looking at balance, let's say. So, and a proxy for balance is 3 out of 5. So if I click 3, it reveals those portfolios that match my criteria. So I'll look at their income portfolio. Oh, I need to admit someone to them.
He did say that the breakup was a long time coming.
Okay, so someone. Gerald, you're not on. You're not on mute. So if you could quickly mute, that would be very helpful.
The other night, we both said I love
Mohan,
you.
oh, there you go. Great, Gerald, you're very welcome. We're just doing some initial dive into Mabel and show you how you compare MPS to other portfolios. So here I've got the Quilter Cheviot MPS income. And I'm going to come back to these boxes in a minute. What it will instantly do, and I can enable the labels on the bar charts if I wish, it will show you the performance over 1, 3, and 5 years of your selected MPS against the peer group. And the orange dot will tell you how many are in the peer group. You're comparing this selected portfolio to 239 others that meet the same risk rating, so like for like. So you've got a very good comparison. As you see, you can take a little snapshot of any of the graphs or download to Excel if you wish. 3-year performance, 5-year performance, the AMC that the manager charges against the average, and the total cost including the AMC of the manager against the average. I mentioned I think there was over 200 in the peer group for this one. If I really want lots and lots of data, I just click this, and what that will do is give you all the data points for those 239 portfolios that made up the peer group, covering performance, fees, and asset allocation. There we go. And I can also download that to Excel and manipulate as I see fit. So for those of you like a lot of data, that probably is going to fulfill your needs. Okay, this is quite simple at the moment because I've only put one manager against the average. I can put up to 6 different solutions in here. So let's say, whoops, let's go 7IM as they're at the top. And again, I'm only looking at Mabel risk rating 3, so I'll have a look at their blended balance. There we go. And that immediately pulls into the chart. So I've now got Quilter Cheviot MPS income and the balance blended portfolio from 7IM. As I say, I can add up into 6 individual ones here. Okay, let's have a look at these other boxes. What's this all about? Right, this month, this box tells you that the month of performance that we're looking at. It defaults to a couple of months before, just in case some DFMs are a little bit slow in reporting, but I suspect both of these are okay with their August data. Yes, they are. So DFMs report to a month end, and typically we get that data within the first 2 weeks of a month. So by this time, yes, we should have most of August data. But if you find that you're doing a comparison, the data's not there, just simply toggle back, go back a couple of months, because there are a small number of DFMs that are either a bit slow to report their data or report quarterly. So please do bear that in mind. Now, the peer group at the moment is made up of all those MPSs that meet a Mabel risk rating 3, i.e. balanced. Now, I can actually specify my comparison here. So I can say, well, actually, balanced is not the same for everybody. So I might want to limit the equity allocation. I might only want to look at model portfolios. And I maybe only want to look at active. So I can do that, and it instantly recalibrates the whole picture for you. And you can see the peer group has now gone down to 92. So very, very quickly, you can generate research on performance and fees. But not only that, whatever I put in here, if I go to the left, also gets pulled through to line charts, risk return, and asset allocation. Let's just look at asset allocation for a minute. So I have my selected managers. What this tells me is their equity allocation across all the key asset classes that they've selected and the peer group. So you might be happy with the fees and the performance, but are you happy with the asset allocation? And this will give you a good deep dive into that detail. And again, you can get all the data that make up the peer group average and look at all of their asset allocation. Again, as you can see, there's a camera there. You can take a snapshot or download individual tables. So if you want to take a little extract and put that in a report or an email, you can. If you tend to run an investment committee or you take responsibility yourself, maybe to review your CIP from time to time, the asset allocation changes button is quite handy. It's defaulted to show how asset allocation has changed over the last 3 years, but you can change that to whatever period you wish. So maybe if you review your CIP, say every year, maybe you want to have a look at that, or maybe more frequently. And you can see the broad asset allocation change of the individual managers and the peer group average. This one's quite interesting, actually, isn't it? It shows that the quota have allocated over that period, albeit 3 years, quite significantly into bonds away from other asset classes. Not so the other manager. So you can have a look at that and see if that meets your criteria. And I emphasize it's your criteria. We see our job as providing you with all the data, not telling you what's good, bad, or indifferent, because it is your CIP after all. Now, I can generate a report here, as I mentioned earlier. So if I hit that button, I can produce that in PDF or Word. I can also customize the chart, the report, and say, what do I want in the report? Whoops. Sorry, a bit clumsy with the mouse there. Line charts, I can look at risk return, which I'll look at in a bit more detail in a minute. And I'm going to look at asset allocation. So if I generate a report, there we go. So this is producing a 16-page report. And remember, you can put this in your own branding if you wish. And it shows all the data that you've compared in a chart. And you can come back to that. You can see how easy it is to put together. So this will save you a lot of time in quickly getting down to the information you need to demonstrate your understanding of the solutions you're using. Now, I mentioned earlier that not all DFMs are partners. Those that are partners, we're getting a monthly pack of data directly from them. So we have all of their portfolio and performance history right back to inception, which means we can do all sorts of additional charts like line charts of risk return. The DFMs that are not partners, what we're doing is looking at their fact sheets and taking that data from the fact sheets and digitizing and putting it in one place. So if you do select a DFM here, and then you go into line charts and find their data's not available, that's because they're not a partner. But all the data so far that I've shown you will be available to all DFMs. These two I've picked are partners. So if I click on line charts, you'll be able to see that. And you can customize the period here, look, if you wish. So 1, 3, 5 and cumulative range. And then you can also look at, okay, well, what's the risk journey been? And you can see a risk return graph here. Clearly, the more managers you put on there, the graph gets a bit busier. There's a top performance page. So the criteria I've got is Mabel risk rating 3, and you can look at the top performing managers. And then you can click on a few of these and decide to run a report. That's the other way around to get the data. And for those DFMs that are partners, we've also created something called Mabel Benchmarks. Now, if you're familiar with asset risk consultants who have specialized in this in the individual bespoke discretionary world, you'll be familiar with this type of graph. What it shows you is, first of all, a scatter graph of the benchmark and all the constituents, rolling risk, period returns, discrete annual performance, cumulative performance, etc. So quite a deep dive into the individual DFM. And again, you can take little snapshots as you go, if that helps you with a bit more deeper dive into their solutions. Okay. Let's go back to the top. You remember when we did the investment comparison report, we used that drop down, didn't we, to select the DFMs. And I mentioned that you can also compare a custom portfolio of your own making. So if I click custom portfolio there and then click in that field, it reveals all the custom portfolios I've already made. So I'm going to make one live for you just to show you how easy it is to do. So if I go down to the left-hand side and I click on custom portfolio, these are the ones I've made already. And you can see we automatically risk rate the portfolios we've already made. You can import an advisory portfolio from elsewhere, so maybe from Excel, if that would help. Or I can add a custom portfolio like this. I'll give it a name. If you don't give it a name, it says computer says no, so please do give it a name. Now, add investment. Now here, I can select a fund or a number of funds for a portfolio, or I can blend that with stocks and ETFs and MPS. So some advisors I know might use a combination of MPSs, so you can blend that as you see fit, or maybe an MPS with a satellite fund. I'm just going to shut down my Outlook because that's rather annoying, isn't it? So if I click on fund, I can then cut and paste ISIN numbers and it'll do the spacing for you. I can put an individual ISIN name number, or I can just start typing the fund manager's name and it will reveal all the share classes for that particular manager. So there we go, there's a Fundsmith one. So if I just click that, select, and just to keep this simple, I'm going to say 100% of that portfolio is in this fund. And I'll click add. And then importantly, I hit this button. So what this is doing is it's using our data provider, which is Lipper through the London Stock Exchange, to pull through the latest performance to the month end. And the reason it's month end is you're then comparing like for like against the DFM. So this is now calculating. And when it's ready, I can use it in all the comparison tools. So there you go. It's telling me it's now ready. Let me just move the picture gallery a moment. So I go back to performance. And remember, at the top here, I need to click custom portfolio. And then I click here. It reveals all those custom portfolios I made. And there's the Julian one I made earlier. And if I scroll down, it's comparing my advisory portfolio that I've just added in against the two MPSs I selected and the peer group average for a Mabel risk rating 3. And that pulls through to total fees as well. And also to asset allocation. Let's go back to the top. So you can see my 100% equity Fundsmith portfolio is showing here, 100% equity against the two MPSs. So this is really useful if you're, it might be a new client that's got to, dump their kitchen drawers full of stuff on you, just create their portfolio that's unique to them. Or maybe you're using advisory portfolios on a regular basis and you can create that portfolio within Mabel, and that's a very useful tool for you to be able to use repeatedly. And you can also share that with other members in your team. So go back to custom portfolio. It's already risk rated it as a 5, as you can see. If I hit that button where it says share, I put the email address in there of somebody else who uses Mabel, and they will have the same portfolio as well. So it saves you having to repeat the work. Okay. Right. Excuse me. Let's go into due diligence. Now, when I speak to advisors, some of them say, look, it's not a job I look forward to, and it takes me a long time. The feedback we get is this, that it's more than a 5-minute job, even on Mabel, but it will save you an awful lot of time. And what this does, it takes you through a 12-stage process, including platform availability and a lot of target market stuff, which is necessarily quite dry stuff, but it's a really good way of you being able to evidence your thinking, because most advisors we speak to are very clear about what they're using and why they're doing it, but not always as happy as they'd like to be about evidencing that. So this is a good way of doing it. So if I click on that, this is one I made earlier. It takes you through these stages step by step, and it allows you to select the criteria, not us. And here's some free text to describe what you're doing. And at the bottom of each page, we encourage you to put some notes in to explain your criteria, what it is you're trying to do to evidence your working. Save and continue. And you'll see at the bottom what this will start to do based on what you put in. It will narrow down, funnel the number of companies and strategies that meet your criteria. And all these notes you put in at each stage will get pulled through to the PDF or Word document at the end. Here I've got a minimum track record, and we're now down to 42 companies. And this section is not a comment on whether the platform is any good. This is just saying, is that investment solution available on that platform? No doubt you do your own due diligence on platforms. And now we're down to 37 companies. Right, this is where it gets a bit wordy, but a lot of it is necessary to demonstrate we've covered all these things. So first introductory part about the company. And then we say, well, what strategy types do we want to include? And here I've just included all of them for the illustration. And then we start to get into the details about the product range, the description of the solution. And now we're getting deeper into consumer duty language and covering, making sure we know what the fees are. Has it got a Mabel risk rating? Yes, it has. Everything has. And then we're into the investor type. So is it appropriate for the type of people that I advise? More on consumer duty. Is it appropriate for clients that can bear capital loss, etc.? And here we have distribution questions. These are pretty much all the same answers for all DFMs, but it is part of the process that one should demonstrate one has covered. And then some final details about chart comparison. You can decide what you include. Save and continue. Final summary of the solution. More notes here I can put in, which gets pulled through, and I generate a report in PDF or Word. And you can come back and do this and update it. There we go. This one's 32 pages, quite a long one. It is a bit dry, but it does a great job in evidencing everything you've covered and all the notes at each stage. So I won't go through that in detail now, but I think you'll get, I think you get the idea. Okay, let's just move the picture gallery again. You'll notice there's this sharing button again. So if you've done a due diligence report, you want other people in your business to see it, you can put the email address there and submit. Just make sure they've got a Mabel account first, because obviously if they haven't done that, they won't be able to see it. And just emphasize, you can have as many Mabel accounts as you like. And whilst we're talking about workflow, I'm just going to show you something called Team Access if you don't want to share on an individual basis. If I click this button down the left, I can put in the email addresses of those that have also got a Mabel account, and you can have permanent access to each other's work. Saves you having to send emails with attachments, etc. Okay, so that covers the investment research section and due diligence. There is information about individual providers. Each provider, we provide you a hyperlink and a contact detail. And if you request data, you can send a message to us and we'll make sure that provider gets it. If you're an IFA that's had an MPS that's built custom for you, then we also host that within our tailored models section. Okay, let's just hide that. So let's go into planning. I'm not going to cover everything today, but I am going to cover cash flow planning, which I think was by popular demand something we should cover. So this page is just a dumb page. It just shows you the last dates you did a fact find, a cash flow or a risk profile. And you can export that to Excel for your own records if you wish. Right, let's go into it. Cash flow modeling. On the home page, which remembers over here, there's a load of tutorials, and you can scroll down and have a look at the cash flow modeling tutorial if you wish. But you can also access it here, look. And if you'd like to read some words, you can click on that and it'll give you some more information about how cash flow modeling works. I became a big fan of cash flow modeling, gosh, 20 years ago when I was responsible for a team of financial planners at Towery, which is now Evelyn and Partners and its latest version. And I became convinced, having watched a number of client meetings, how powerful that can be. So we tried to build it in a way that I believe that financial planners use it. We get lots of positive feedback. It's pretty intuitive to use, and you don't have to become a second dan black belt to become competent in our cash flow planning tool. So here's an interesting one I've made before, which I'll go through. Again, you've got the sharing button there if you're not doing the team access thing, so you can share work. So if you've got an outsourced power planner, that's a good way to do it, so they can look at the same piece of work. So this is one for John and Elizabeth I made. You can clone the details by hitting that plus button, and you can add another simulation. So it'll just copy and paste all the details you've already put in, and then you can just tweak the thing you want to tweak. Maybe you're changing their expenditure in later retirement or whatever it happens to be. And you can just give it a different name. Rather unhelpfully, I've called my second version the same as the first one. But leaving that my stupidity aside, that's how you use it. Okay. Now, I mentioned earlier on that we do tax, and we do. In fact, the FCA said in their thematic review last year that you need to be taking into account tax, and we do, and that includes top slicing on bonds, tax on trusts, obviously on pensions, etc. So that will really make a big difference, I think, to how quickly you can do those calculations, and B, I think it really demonstrates very, very quickly the value of financial planning just in the tax side of it, let alone anything else. You can fill in from the fact find if you've used ours, or you can pull it in from your back office. I said we do tax, so it's important you say what jurisdiction they're in. It's defaulted to assume a 2% inflation rate. You can override that if you want to make a different assumption. The cash flow is defaulted to end at 99 for the first person you put in, but you can override that too. Sorry about the coughing. Here you put in the pension settings and tax allowances that are likely to vary, particularly the income tax allowance. Here I've put John's already spent his PCLS, but Elizabeth hasn't. And then I press update. I won't on this one because I've already pre-made it. Then we go into assets, and we can add in what individual assets they might have. So here I can either select an individual NPS, or I can use a Mabel risk rating. The benefit of actually selecting the solution you're going to use is that it pulls through the expected volatility, growth, yield, and the relevant fee for that investment. And another thing the FCA mentioned last year is that you really need to take care of assumptions within the cash flow to ensure that that it's realistic. So we thought by doing this, well, if you're actually using the fees and the risk profile of the investment you're going to use, that really does align your cash flow appropriately for your individual client. I've just realized I've used a less interesting cash flow report. So I'm going to go back and use a different one, which might be a bit more exciting. Let's make sure I've got the right one. No, got the wrong one again. Bear with. There we go. Okay, so we got to the asset page, didn't we? I've chosen this one because they've got lots of different accounts. So I thought that might be useful. And you can see here, I've got a Brooks Macdonald solution. I'll change that to something else. Let's say Morningstar. They've just come on board as a partner. There we go. Submit. So here I've got lots of different accounts. You can have as many of these lines as you like. We've also got another. You might have a client that's got some esoteric investment. I don't know whether it's fine wine or classic cars they might have, and you can put that in there and put in a nominal rate of return. Go to next. And this is where I put money in. So all the income the client's got coming in or expected to come in, and this is a gross figure. And you can do one-offs, and over a period of time you can stop, start, and all the different types of money in. And again, you've got a custom. So if there is something landing into their bank account that's not covered by those standard types, you can do that. Then I go to next. Then I've got money out. Now, another thing the FCA said, and I think this is valid, is that it's quite useful to have different labels for spending. You don't have to do that. You can just put it all in lifestyle if you like, but to be able to separate out spending to different types, I think makes sense. So, for instance, essential clients may feel more comfortable if that's covered by secure income. Here, I've got this client who's spending 24,000 a year covering his bills and living from now till 99, and from now to the age 75, he's also spending a whacking additional 72,000 a year net, having a great time. But then from 75, he's reducing that to 40,000 a year, something a bit more manageable. This is where you put in contributions, so you can put in pensions, ISAs, etc. I haven't done for this one. Okay, this is where it gets pretty sophisticated. I can either manually order how I decumulate the pots, and you'll be familiar with this if you've used cash flow before. And what the system will do is it will take money in order of the pots that you've left them in. So now with the planned pension changes, you may be putting that first, of course. Let's see if that remains. So that will take them in that sequence, or you could just nest them together, in which case it will take them. It will take them simultaneously. That's another way of doing it. So if you're an advisor that likes to have different risk ratings for time horizons, so you want a lower risk pot that they take from first, you'd put that in first. In this case, a Mabel risk rating 3, then a higher risk pot afterwards, which might be more suitable for longer term. Or what is very popular amongst our users, you hit this button and I submit. And what that's doing is saying, Mabel, okay, can you just, in theory, work out for me what's the best way of decumulating my assets all the way to 99 to lower the tax to the lowest possible rate I can. I say in theory, of course, because things change over time, don't they? But it's a good way of setting out a strategy at the beginning. And you can see, despite this client taking quite a lot of money, we've got their tax rate down to 19.5. So it's a good way. I mentioned the cloning. If you do a simulation, first of all, just doing what the client's currently doing, and then do another version with the optimized for tax, you'll be able to see immediately I suspect, some improvements and enhancements you can make for the client. Okay, what's this chart show you? Ignore the colored charts for a minute. Just look at the black line. That's just simply telling you on the right-hand scale how much needs to be withdrawn from their assets to meet their lifestyle requirements. And the colors just tell you in proportion where that withdrawal is coming from. So when he's 65, 100% of that withdrawal is coming from his ISA. But the following year, 18% is from his ISA and 81% is from his pension. You can take a snapshot if you wish. That's more for you, that particular graph, I think, but I think quite useful. The next one, perhaps a bit more client friendly, what you might call the glory picture, shows you the assets over time, taking into account all the money in and the money out, the investments you've made and the various growth assumptions. And you can see this guy, in the long term, they're gaining money. But I think what's quite interesting is it's obviously quite finely balanced up to his mid-70s because he's taken out a lot of money. If they were running out of money, of course, you'd see this bar chart go down to zero at some point. And if there was a shortfall, we would tell you in present value terms what that is. So that can put it in kind of real terms today for a client, which might make a lot more sense. Now, this particular cash flow is dominated by his pension, so it's sometimes hard to see the details. So if I just, all these charts are interactive or dynamic rather. So if I click on that, it will remove that from the picture and rescale the chart so you can look at in the detail of some of the other assets and see, right, okay, well, we've decumulated from these pots quite clearly. And then the pension a bit later on. It's a big old pension. Again, you can take snapshots, so you perhaps send that in an email or report in advance of showing the client the whole report, then the detail below. And in the interest of time, I'm going to skip through these quite quickly, but it's worth spending a bit of time on if you are going to familiarize yourself with this. This shows you how money in and money out is being matched off. All the different taxes that we've calculated. As you can see, all the different types of tax there, how much of each tax is being paid in each year based on the withdrawal strategy. Next, this is where I do the simulations. This is where we're using the last 28 years of actual market data to look at a range of probabilities of the financial outcomes right the way through the cash flow period for the client. And there's three types of simulation you can do here. One on the basis I've just described, and then you can run it again, lowering the expected investment return. So really stress testing the strategy you've got in place for a client. And then you can run another one, overlaying the first simulator with a big market crash, and you can choose how much that is at a date of your choosing. So this is doing a live Monte Carlo simulation. So this is why it takes typically 30 seconds or so. And here you can see a range of outcomes. So basically the red line, all the good years, one after the other, and the black line being all the bad years, one after the other. And it tells you here, on average, there's an 89% chance of covering all expenses over the period. Or to put it another way, a 10% chance of running out of money. And this table here below in numbers tells you the probability of falling below the starting capital, 75% of starting capital, 50% and 25%. So hopefully a contribution towards your capacity for loss calculations. Again, all these charts are interactive. So if you just want to simplify this in front of a client, you can. Say, look, the middle line is where you're most likely to be. And it shows, because they're taking out quite a lot of money, that, you know, total assets are likely to fall in the mid-range before recovering as they start to take fewer withdrawals or a smaller withdrawal in later years. So hopefully that will make sense and be useful for you. I won't run the other ones just now in the interest of time, but you get the idea. And then I can add some notes and then generate a report in Word or PDF. And remember, I mentioned the settings, which was bottom left. I can put this in my own branding if I wish. And this pulls through an 18-page report. And all the notes you put in at the beginning and the end will get pulled through to that report. So that is a whistle-stop tour of Mabel. I hope you found that useful. I mentioned right at the beginning of the webinar that you're welcome to come and have a meeting with us on a one-to-one basis. If you go to the homepage, you'll see schedule a meeting with us, and that's linked to our calendars. So you're very, very welcome to hook up for half an hour or an hour, and we'll take you through one or more of the tools as you see fit. If there is data on, if there's data from a DFM you'd like to see and we haven't got it, they're vanishingly small, but there are some, please drop me a line and we'll do our best to make sure that we fix that for you. And any feedback you've got on how you'd like us to develop our tools, feedback is what we thrive on. So please tell us what you think, and don't forget to sign up. Thank you very much. Mohan, over to you.
Right, thank you, Lawrence. That's very informative. Appreciate that. Thank you very much.
No problem.
We will now distribute this out to all the advisors out there. So thank you again for your webinar, and speak to you soon.
Okay, thanks guys. Nice to meet you.
Thank you.
Cheers.
Bye-bye now. Bye.
Bye.